Good morning and happy Thursday, and welcome to the Business Show, your go-to source for money and finance news in 10 minutes or less every day. I'm Andrew Gincola, and today we are diving into the Fed-fueled rally as stocks soar on hints of upcoming interest rates cuts. And Nvidia is planning to spend hundreds of billions of dollars on U.S. manufacturing to shield itself from supply chain disruptions. And all eyes are on Nike's earnings report that happens today. In addition to FedEx is also gearing up to have an earnings report. And the Social Security Administration is cracking down on fraudsters. They have some new things that could make it more difficult for folks to get their Social Security. We've got all that and more. Let's get down to business. So the big news of the week is all eyes were on what will the Fed do this week. And the Fed made its decision on Wednesday that it's going to hold rates steady, but more cuts may be coming. And so the Federal Reserve decided to keep interest rates unchanged on Wednesday, maintaining its key borrowing rate between 4.25% and 4.5%. Now, the Fed held these interest rates steady despite ongoing economic uncertainty. And officials project 2 rate cuts in 2025, totaling a 0.5 percentage point reduction by the end of the year. And the Fed downgraded its economic growth outlook to 1.7% while raising its inflation forecast. And the post-meeting statement emphasized that uncertainty around the economic outlook has increased. Now, because of this, there was a Fed-fueled rally, and most of this is because rate cuts are driving some of this market optimism. So stocks surged on Wednesday as the Federal Reserve officials hinted at 2 potential interest rate cuts coming this year. And the positive outlook provided a much-needed boost to markets struggling to recover from weeks of losses. Now, what's happening? The Dow Jones Industrial Average jumped 383 points. The S&P 500 climbed 1.08%. And the NASDAQ Composite gained 1.41%, but still remains in correction territory. And then futures dipped slightly Thursday morning as investors weigh the sustainability of this rebound. So why this matters is because there is rate cut optimism. Hints of future rate cuts are giving investors hope for a market recovery after weeks of selling pressure. And there might be a broad market rebound because gains across all major indexes suggest renewed confidence, but correction territory remains a concern. Now, will the Fed actually follow through with rate cuts? And if so, when? The market's rally might be short-lived, or is it something of a bigger comeback? Stay tuned for more updates. Nvidia makes a massive U.S. manufacturing investment. So Nvidia is making a massive bet on American manufacturing, with CEO Jensen Huang announcing plans to spend several $100 billion on U.S. production over the next 4 years. And Nvidia is preparing to invest hundreds of billions in manufacturing chips and other electronics within the United States. Now, this move comes in response to President Donald Trump's recent tariff policies, which threaten to disrupt the supply chains of companies like Nvidia that rely really heavily on Asian manufacturers. And Nvidia shares are down 0.7% in pre-market trading as investors react to the news. Now, why does this matter? Because by investing heavily in U.S. production, Nvidia is aiming to reduce its dependence on Asian suppliers and shield itself from potential trade disruptions. And such a massive investment could create hundreds of thousands of jobs that bolster the U.S. semiconductor industry. And the shift signals long-term commitment to expanding its manufacturing capabilities and reduce geopolitical risk. Now, how will Nvidia's plan impact the bottom line, and will other companies follow the lead? One thing is for sure, Nvidia is making a bold play to fortify its manufacturing capabilities on U.S. soil. All right, we got 2 big earning reports today. One big one is Nike, and Nike is in the spotlight today as investors await its quarterly earning reports set to be released after the market closes. With shares down more than 25% over the past 12 months, all eyes are on the company's comeback efforts under new CEO Elliott Hill. Now, Nike's revenue for the fiscal third quarter is expected to be $11.02 billion, which is a significant drop from the $12.43 billion a year ago. And earnings per share are projected to decline 0.28%, according to Visible Alpha estimates. And Nike shares are already edging lower in pre-market trading as investors brace for disappointing results. Now, will Nike's earning report offer a turnaround or confirm the company's ongoing struggles? And if earnings disappoint, will the stock market continue its decline? Nike results could set the tone for the future of the company, so let's see what happens later on today. FedEx also has earning reports today, and it is on the radar today as the shipping giant prepares to release its fiscal third quarter earnings after the market closes. And analysts are largely optimistic, expecting strong results despite a slight dip in pre-market trading. Now, analysts forecast adjusted earnings per share at $4.63, which is a 20% increase from the same quarter last year. And revenue is expected to edge 1% higher, reaching $21.96 billion. And the average analyst price target is $317, suggesting a potential 28% upside from Wednesday's closing price. Wow. Now, there is profit growth despite challenges, and FedEx's ability to boost profits by 20% amid economic uncertainty signals that they have strong operational efficiency. If you can see a company that is increasing revenue in times when most other companies are trying to cut back and they're trying to find ways to find revenue, that is a big deal. Now, what is next? Will FedEx's earnings exceed expectations and trigger a rally? That's what we're watching here on the Business Show, and FedEx's results could set the tone for a broader shipping and logistics industry. Stay tuned for the full breakdown tomorrow. All right, Social Security has some new anti-fraud measures, but there is some pushback on these because it could create more work for senior citizens and some elderly folks in the U.S. And the SSA is implementing stricter identity proofing measures aimed at curbing identity fraud. But the move may cause longer wait times and more inconvenience for beneficiaries. Now, starting March 31st, individuals applying for benefits or changing direct deposit details must verify their identity in person if they can't use their online My Social Security account. Now, the agency is moving away from knowledge-based authentication, which relies on personal questions that have become more vulnerable due to data breaches. And this enhances proofing measures to aim to reduce fraud losses currently exceeding $100 million per year due to redirected benefit checks. Now, fraud has been going up significantly over the last couple of years, and $100 million per year is no joke. So, with scammers increasingly finding ways to redirect benefits, the new process is meant to enhance that security. Now, local Social Security offices may see up to 85,000 additional visitors per week, raising the concerns about wait times and accessibility. And the AARP and other organizations worry the changes will disproportionately impact older, disabled, and rural residents, which is a very real concern. Now, here's the big question. How will the new procedures effectively combat fraud without overwhelming local offices? The SSA's efforts to combat identity fraud could bring major changes on how millions of Americans access their benefits. Thank you again for tuning into the Business Show. If you know someone who would find value out of this episode, share it with a family member or a friend. Also, if you enjoyed the show, please take a moment to leave a 5-star rating and review. It helps us reach more people with this message. And don't forget to follow the show on Apple Podcasts, Spotify, or your favorite podcast player. Thanks again for listening, and we will see you tomorrow.